Simon Wallace, you are Global Co-Head of Real Estate Research at DWS. Thank you for joining us on BiTV.
Thank you. Good to be here.
DWS's Europe Real Estate Outlook report singles out residential as the strongest sector. What do you see as the most interesting path for investors looking to capitalize on this trend in France?
I think residential investment is something that we like across Europe at the moment, and France is no exception to that. So I think there's a number of reasons why we like residential at the moment, and there's a number of reasons many investors like residential at the moment. I think particularly right now, as we're going into a period of uncertainty, perhaps residential has certainly in the past, and we think in the future will continue to provide a very strong income stream for investors. And there's a number of reasons for that. One, it's a necessity product, particularly when we think about affordable residential as well. It's the last thing to cut really from your budget if you have to make cuts in difficult times. Also, the supply-demand imbalances within residential remain. We see our cities continue to grow, and often we're not building enough housing as well in these cities. So therefore, we see very, very low levels of vacancy in these markets. And then if we look at the French market in particular, French market similar to markets perhaps like the UK, Spain, Italy, perhaps a less mature residential rental market this is than other parts from an institutional perspective. And therefore, we do think over time that you will see an institutionalization of the market going forward. What does that mean? Institutionalization, more institutional capital, and therefore, alongside the rental growth that we see in the market, we should see some yield compression as well. So both of those factors leading to strong performance. I think within the French residential market, where do we like at the moment? Often we like suburban locations in the major cities. So if we think about Greater Paris, well connected suburban locations surrounding Paris proper. I think those locations have already started to see strong population growth over recent years. And actually, we think COVID will only exacerbate that as well, as we see more people moving into these perhaps more suburban locations, still well connected so they can get into the city centre to work, but also with a greater amount of space, perhaps more green space as well. And then finally in the French market, we do like some of the regional cities as well. We've got a push at the moment to think about some of the fast growing regional markets. Let's take Toulouse, for example, in France. Why do we like these sorts of markets? Fast growing population. We're seeing wage growth in these markets. You're seeing rental growth in these markets, but you also tend to see higher levels of yield as well. So if you're looking for a greater income return from your investment, then some of those regional markets work as well.
Okay, and speaking of asset classes that have shown resilience in let's say troubled times, let's talk about logistics, if you will. Your report is maybe more cautious about logistics. What are your advices for investors interested in French logistics?
I think, we are becoming more cautious around the logistics market. It has had an exceptionally strong performance over recent years. The last, you're seeing very strong double-digit returns over the past 12 months or so from the logistics sector in France and really across the globe. This has been a story around the logistics market. I think why we're getting more cautious around the logistics market is, one, pricing has moved aggressively. Two, we are seeing more supply come into this market. And again, some of the pressures that we're expecting to see logistics operators face over the immediate future as well. So if we think about rising fuel costs, rising energy costs, increasing wages, again, all of these have a bearing upon logistics operations. And then generally, if we think that we will see a softening in consumer demand, that will lead to some reduction in demand from the logistics side. But I think it's important to remember, though, that we do still see lots of momentum in the logistics market. We don't see this falling off very quickly. we think this year, next year will still be periods of strong returns for the logistics market. But if you're buying today for a 10-year hold, for example, perhaps pricing is a little bit rich for some investors, and some investors may struggle to meet their return targets at today's pricing. So I think what that means for our logistics strategy in a market like France would really to be concentrating on urban locations, near urban locations, where the supply of new logistics product is constrained. We do see for parts of the French market some corridor locations, perhaps around Lille at the moment, where there is a large amount of supply potentially coming into that market. And that's where we have some greater concern, is where it's a corridor location, less constrained, and the potential for over a 10-year period, we'd see more competition, and therefore rental growth doesn't meet the needs or the requirements for investors at today's prices.
Okay, thank you. If you will, I will quote a part of your report in which you state that European real estate saw a marked improvement in returns during 2021 and is expected to continue to perform well over the coming years. How do you see France comparing to its European counterparts in that regard?
I think broadly in line with its European counterparts at the moment. And I think, look, obviously over the last few weeks, things have been changing. Forecasts have been evolving from the economists. All economists across the world are changing their views at the moment. So we need to be aware of that things are in flux at the moment. But broadly speaking, for the European real estate market, we think it looks relatively defensive in these uncertain times, particularly for core products at the moment. The French market, broadly similar. I think if there is this flight to quality, to safe havens, then the French market would look like one of those locations which tends to benefit in these periods of uncertainty, particularly markets like Paris, for example, whether it be residential, whether it be logistics, or even the office market. If you've got a long lease in something like the Paris CBD today, you can see why capital looking for a safe haven would be moving towards that part of the market. But broadly speaking, our views around the French market were performance in line with European average.
Okay. Well, thank you very much, Simon Wallace, for your insight and your time today. And thank you all for joining us. See you soon on BiTV.